Alright, so onto the balance sheet for that question. Standard kind of balance sheet, your three columns. You're going to start with your fixed assets, and they'll be cost, accumulated depreciation, and your net book value. I would say nearly your starting point for the balance sheet is your accumulated fund and seeing what assets and liabilities were there at the start of the year, and they'll still be there at the end of the year. They'll have changed, maybe some of them will still be the same. So clubhouse and course and equipment are my fixed assets at the start of the year, and they're going to be my fixed assets at the end of the year. So clubhouse and course, and then equipment. So the cost for the clubhouse and course is $550, and for the equipment it's the 26 at the start of the year plus the 15 that you bought during the year, so that's 41,000 cost. Your accumulated depreciation for the clubhouse and course is 22,000 that you had to calculate as part of the accumulated fund, plus this year's depreciation, which you calculated to be 11,000. So 22,000 plus 11,000, 33,000 is the accumulated depreciation there. For the equipment, you calculated 2 years depreciation sitting there at the start of 18, 10,400. Plus this year's 7,450 that you've calculated already gives you accumulated depreciation at the end of the year of 17,850. Cost take away accumulated depreciation is a book value of 517 for the clubhouse and course, 23,150 for equipment. Okay, there is no other fixed assets there in assets. That doesn't tell us we bought anywhere else in the question. All right, so we'll tot those up. 591,000, 5850, and 540,150. Now, so let's just go to so bar stock. I'll probably have that at the end of the year. I think I remember seeing that in the questions. That'll be a current assets when I come to it. Investment interest due, if that's sitting there at the end of the year, yes, that'll go further down the balance sheet. The investment itself, okay, so that's a financial fixed asset, all right, of 67,500. We own an investment worth 67,500, so I'm going to put that in next as a financial asset. Bar debtors, yeah, check for that at the end of the year. It's probably in the adjustments. Building society, 10 grand. Remember, I moved that kind of into my main bank account, so it's going to be included in your closing bank account, so that's not going to be there kind of in that form. Levy due, check if there's any levies kind of due at the end of the year, or any maybe prepaid for 19 or anything like that. Same with any kind of subs, prepaid or anything like that, just at the end of the year for 19 might go in current assets or current liabilities. Life membership, yes, that's going to be there at the end of the year, and I remember I added a few more of those. Bar creditors, yeah, check what that is at the end of the year. Wages due, yeah. Levy reserve fund, that will go in. I think I might have added to that as well during the year. Subs prepaid, check if there's anything like that at the end of the year. Bank, yep, so that was 7,300. The start of the year it's 83,300 here. Loan then, remember I paid that loan off during the year, so that was down as a payment, the 20,900. So that loan is gone, and that's it. All right. So that's, yeah, that's kind of a good guide to what assets and liabilities I have. So it was the financial asset next, the investments. So financial asset, which is an investment, and it's 67,500 is what I figured that out as. at my current assets. So what will they be? Bar stock and catering stock, 13,600. You can just put those in as a single entry for closing stock. 13,600. Bar debtors, 500. Investment interest due at the end of the year, 800. So that's income for 2018 that I am owed. Okay, so I'm owed money next year for this year. So that is money I'm owed at the end of the year. It's like the investment company is a debtor for me. They owe me money, so that's going in as a current asset. Investment interest due. Subscriptions include 5 new life memberships, so we'll take that'll be further down. Subscriptions for 2019 amounting to 900. So subscriptions prepaid. So receive money next year, owe them the service next year. So that's actually a liability. So I'll deal with that. Levy for 18, levy for 17. Write that over for the membership off. So the life membership will be sitting down kind of in a finance buy section, but not need to put anything up here. Lotto grant dealt with, equipment dealt with, wages due at the end of the year. So an expense for this year that I haven't paid, so I owe the money to someone at the end of the year. So that's going to go in as a current liability. Okay, so what current assets then do I have? It's here, okay, in the so the receipts and payments is like a T account, all right. And if you remember when you closed them, it would have done like your balance CD and your balance BD, bring your balance down. So if you kind of close the balance off on this side, 83,300. In the next period, you're bringing it down onto the debit side. So that 83,300 balance there is a positive bank balance. Okay, that's money you owed. So like in the previous period, I must have had to put the balancing figure in on this side. It got carried down then as a liability, as a bank overdraft at the start. So that 7,300 went in as liabilities. This one here, because when I close it, I bring it down here then for the next period. So that is going to be an asset, that 83,300. So bank is going to be a current asset of 83,300, and that's it. So add the 4 of those together, you get 97,700. Then I've got creditors, amounts due within 1 year. So I had a few of those here. I have bar creditors of 1230. I have, so remember I said the subscriptions prepaid would be a current liability. So subs prepaid of 900. And there's something else here. Yeah, the wages due at the end of the year, 2,500. That is also a current liability. Just check the liabilities at the start of the year. Is there anything, a corresponding thing I'm missing? Life membership will be further down in finance by. Bar creditors I have in. Wages due I have in. Levy will be further down in finance by. Subs prepaid I've got in. Bank is an asset this year. Loan is paid off. Interest due, that was related to the loan, so the loan's gone now, so I'm not going to have that corresponding liability at the end of the period. Yeah, so that's everything for the liabilities. So add those up and you get 4630. Take that away from your current assets and you get 93070. So subtract those from each other and that's your net current assets. Add those and you get 720. So your fixed asset, your financial asset, and your net current assets. 720. I'm going to have then a financed by section down at the bottom. So try and hit that 720 number again. So if I had any long-term loans or anything here, this is where they go. Remember, I've paid that off. So what creditors falling due after 1 year do I have? What finance by do I have? I've got life membership. Okay, so financed by life membership. So that's a long-term liabilities. Remember, we're writing that off over 10 years. Okay, so that's a long-term liability. That's an amount due after 1 year. So remember, that was 45,000 at the start of the year. Then I added another 5. There were 15,000. So my life memberships I got as being 60,000. Worried about that? Yeah. So my life memberships were worth 60,000, but then I wrote 6,000 off to the profit and loss, the income and expenditure, as income. So 60,000 take away 6,000 is how much is sitting there now for life membership. So that's 54,000. All right. So it's the 45 that was sitting there at the start of the year. Plus I added 5 more, got me up to 60, but then I wrote 1/10 of that off. So that was 6,000. So it's now worth 5,400. The levies then. So levy reserve fund at the start of the year was 30,000. You can do some of this in workings if you will. I'm just going to do it kind of quickly. So levy due at the start of the year, levy at the start of the year is 30,000. I received some of those in 18, but they will be included in the 30,000. So levies for 2017 of €50 each due from 20 members. That's just a delay in getting that money in, but that 30,000 would have been included in the 30,000 that's sitting there at the start of the year. The new levies are the 2018 ones. Okay, so I'm doing the 2018 accounts. So I added €50 each by 600 members. So that was 30,000. So remember, I took that out of subs, that 30,000. So I had 30,000 at the start of the year. I added 30,000 new levies. So your levy reserve is going to be 60,000. All right. What else? So if you think about your normal finance buy, you bring in your capital and you bring in your net profit or your profit and loss balance. So for a club account, the equivalent of those is the accumulated fund. That's the equivalent of your capital. So I'm going to bring in my accumulated fund of 521,540 that I worked out in part A. So 521,540. And then the excess income over expenditure. So it's the equivalent of my net profit, the answer from my income and expenditure account. So that's 65,180. If you add the 4 of those together, you're going to get your 700 720 again. So balance sheet